Ross O'Brien with the Economist Corporate Network in Hong Kong. We've just finished Islands in the East, the future of technology, globalization, and the financial exchange in Asia. A luncheon meeting sponsored by NTT Communications. And I'm here with NTT Com's Chief Strategy Officer, Brandon Lee, and also Mike Powell, who's Managing Director for Managed Services for Thomson Reuters. Gentlemen, thank you very much for your comments this afternoon. Brandon, we've been talking a lot about how Asia, in some sense, the financial hubs of Asia, lag behind their peers or counterparts, other financial centers in developed economies. But do you think that that's changing?
I believe from a technology perspective, we're definitely catching up.
Yeah.
I think from a governance and policy perspective, I think the whole region has a lot to learn from all the experience from the US and from Europe.
Right.
So from a technology perspective, I think we're catching up, making the right investments around the world. From the usability perspective, I think the whole Asia needs to really evaluate how they can be a little bit more competitive in the region.
And Mike, from your standpoint, you obviously look over markets globally. Is the gulf that significant between Asia and the rest of the world? Is there a lot of catching up that needs to be done?
Yeah, I think that gulf's closing to a certain extent. I think, given the attractiveness of the Asian economies, you've seen European and US-based banks and investors come to Asia and bringing their trading models, their trading infrastructure with them. Mm-hmm. And I think the local participants in that market, in these markets, are looking at how they respond to that. They have huge retail and institutional investment base, so perhaps the business models are a little bit different, but ultimately those are going to look to come together. I think part of that will be driven by the changes around regulation and market structure, but also some of the products that the incumbent exchanges are launching. I know a lot of them are reviewing their co-location strategies. Right. Some of them don't have any, where they introduce them. We've seen a whole sway of new trading platforms be launched across, Tokyo with Arrowhead, SGX and ASX over the last couple of years. So you're certainly seeing that push from a technology and innovation perspective. I think, we all believe there's a long way to go from a market structural and regulatory perspective.
Right.
But there's definitely an evolution here, and it's being driven by the underlying economic growth and the attractiveness of the region for offshore investment as well as onshore investment.
And you mentioned regulation, but there are some areas of regulation that say cannot overcome some of the issues regarding, say, fair playing fields. I mean, some obviously a role of regulators in some sense to create a fair playing field, but when you get right down to giving equal rack space and equal cable lengths to every single stack of servers, that's not the job of a regulator to ensure a fair marketplace, is it?
No, and I think there's a lot of debate, and this is debate that's raged in London and New York for ages around, what does low latency trading mean to the average investor or mutual fund and so on. That's potentially the wrong question, because I think, as a private investor, or if I'm running an investment fund, when I choose to trade, I want to make sure I'm getting a good price. So therefore I want very effective execution of that trade. So that's very different from a high frequency trading strategy, right? So I think you've kind of got to look at it from that perspective. Where it comes down to level playing fields, we just talked about two different business models there. If someone is looking to say, I need to colo and I'm part of an HFT strategy, or for my agency algorithmic trading, where I want to be one of the best quality execution in the region, when I then deal with an exchange who's offering a colo product, first of all, I'm going to want equal access. So if an exchange is going to offer that, it has to be able to guarantee that all its members are going to have availability of space and power. Power is a big issue in the data centers.
Yes.
So there's no, you can't really do it on a first come, first serve if you're going to have a fair and equal market.
Right.
And then once you're in the exchange, one of the things, again, we're seeing in the more sophisticated centers in the West is people looking at sort of really nanosecond level latency, and they're saying, equal length cabling. So no matter which rack I take in their data center, I'm not at a disadvantage or an advantage.
Right.
And that really gets to a very granular level of detail, which ultimately each trading venue is responsible for. I don't think you're going to get regulators stepping in at that level, and that's really about providing equal access and fair service to the clients that you want to bring into that environment.
Right. Brendan, you made an interesting point when we started looking at the future of the Asia Pacific, and when you specifically looked at Japan's need to somehow branch outwards. I mean, we obviously see that as a big theme within the long-term recovery of Japan, but it's specifically around financial exchanges. There's a lot of talk about consolidation between Tokyo and Osaka. There's a lot of tire kicking, if you like, of exchanges within Asia looking to merge with each other. Do you think that somehow the Japanese market could emerge as a leader, a trendsetter in this regional integration process you've described?
I think it could be very well possible. I think first of all they need to merge within Japan first.
Right.
And I think once they actually have that accomplished, in order for them to grow, they need to go outside of Japan, and obviously they need to tap into other markets and find a way how to cooperate. I think in terms of exchanges in the region, it's very difficult for them to merge into one single entity because there's a lot of regulations which is tied to the country.
Yep.
But obviously they have they can establish some kind of working relationship, so they can have a much better flow of information as well as currency, cash, liquidities.
If you had to point to one significant positive change that you see forthcoming in the region over the next decade, if you got out your crystal ball, what would you see as the thing that would be happening most positively for the benefit of Asian financial center development?
Well, I think one thing that Mike mentioned very well was technology rate is an enabler.
Yeah.
Basically, what technology, what we're providing is we're providing a much more cost-effective way to get things done. I think when we talk about trading and with the technology that underlines the entire trade to happen, hopefully we actually lower the cost that everyone can afford to make investments.
Right.
And reduce the cost such that it's actually more beneficial to the entire world, to the entire populations.
Okay. And Mike, your thought, the biggest positive change that's going to occur in Asian markets over the next decade?
Well, I think we've started to see a little bit of market fragmentation, and that's encouraging for investors and traders who want to see tighter spreads, lower cost of trading, deeper liquidity in markets. I think
Yes.
Japan we were talking about a moment ago is a good example of that. I mean, TSE is looking to merge with OSE for a reason. They're looking to protect their liquidity franchise, because we have seen Chi-X Japan and SBI Japan Next start to make some impact in that market, and that was encouraged by regulatory changes with allowing people to want to settle on JSCC, and that's important. So that kind of structural and regulatory change almost needs to go hand in hand.
Yes.
We're not seeing market fragmentation to the extent of what we've seen in New York and Europe, and there's reasons for that. Regulatory, currency, distances, market structure, and so on. But we are beginning to see an inkling of that, and I think just that sort of general trend of adoption of that approach to the market will continue and improve transparency, liquidity, reduce cost of trading, and ultimately as that cost of trading decreases, it's a dynamic effect. So that will drive more. And then the other point really is, the big question mark is what happens with Chinese markets in terms of deregulation, opening up to foreign investment, and indeed, the increasing wealth of the Chinese population, and as they look to invest outside of their domestic markets and look at more interesting investment products for their pensions, their investments. And I think those are two of the key dynamics that will really drive what happens in the region.
Absolutely, and as with all things, it all goes back to what happens in China. Brandon, Mike, thank you very much for your time. I'm Ross O'Brien with the Economist Corporate Network in Hong Kong. You've been watching our wrap-up of Islands in the East. Thank you for watching.